How will the Forex market move during a potential Brexit? That is the focus of today's video from Admiral Markets with the Forex overview on these four currency pairs. First of all, though, be aware that this video is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that and to find out if it is suitable for you. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. Plus, by continuing watching this webinar video, you agree with this disclaimer and you are aware of the risk involved when trading. Well, in general, folks, of course, this week could be quite volatile, especially on Thursday and Friday when the results are being known. Actually, on Wednesday, things might quiet down in anticipation of the referendum in the UK, whether the United Kingdom will stay or leave the European Union. That's what the voters are giving their opinion on. So that's going to be, of course, a very charged event, and there could be a lot of volatility connected to that on the pound and pound currency crosses and all the Forex market and financial markets, in fact. So that said, let's take a look at the technicals with all those cautions in mind. And you can see that basically price is testing this resistance trend line on a weekly chart. So that is kind of a pivotal moment. We had a couple of candles already here, as you can see, that failed to break through that resistance. And ultimately, we got a pretty good dip after that. But when we reached the 140 support level, price was unable to break through it. So let's see how price responds here. Could it be a bouncing spot or a break spot? In fact, it could be both. If price does break, there could be space, up to the 61.8 fib of this swing high, swing low. And there could be also, of course, a minus 272 target of this swing high, swing low. All right. So there's a confluence between those two fib levels. That could be the breakout target to the upside. Bounce, I think, could just challenge basically the support again and could see price basically dip back to maybe 145, 142.50, 140 area. All right, so any of those psychological round levels, it could dip back to and basically stay within support or resistance in the upcoming week. So if we then dive into the daily chart, you can see that a bit better that we've had a lot of momentum since challenging that 140. And I would personally rather wait for a bit of a pattern here, a bit of a triangle, and just be very cautious this week. If we do get a triangle, I think the breakout could basically look good. A breakout would need a good daily candle like this, for instance. Let's say we have two daily candles like that, or maybe even a 4-hour chart. We can see that a bit better. A triangle like that, and then we get a good candle that towers above that triangle, towers above this top with a good close. And near the high, something like this, that's a good breakout candle, and then a continuation to the upside seems likely. All right. If we, at this moment, I don't think it's very interesting because it made already a pretty big move up, very big. Let's see, about 600 pips, I think. Yes, and we're right at resistance. Look at all these tops in here. So it would be natural, I think, for price to make a bit of a pause, a bit of a correction here, like a triangle, before making any move whatsoever, before up and down. That is at least what I would like to see before even trading this right into resistance, and also not against such a momentum either. So both up and down, I think I'm going to be cautious. I want to see a bit of a pattern and a break of that pattern. But with all the news events, of course, on Thursday, that is something to be cautious of in general as well. All right, by the way, regarding the British referendum, Nenad and I are going to talk about the potential impact on the financial markets on Tuesday at 5 p.m. GMT time. We also have our usual webinars, of course, on FX setups from Nenad on Monday. I take a look at price action on Tuesday, strategy on Wednesday using fractals and momentum. And Thursday, we take a look at Fibonacci Advanced. We're going to dive into real good details there, part 1. Next week, part 2. And of course, this Thursday, we'll also kind of keep an eye on what's going on with the vote. All right, let's dive into some non-pound pairs here. We got a euro-dollar 1-hour chart. Last week I said I wouldn't be surprised to see a heartbeat day, something where price basically goes up, down, and kind of closes where it roughly opened. And that happened exactly indeed last week. We opened here, we closed here, and the difference between the open and close is marginal, as you can see. And we had up, down, and then up again, exactly as I was thinking. So if you like that particular analysis, I would love it if you would share it with others or click on like. We would really appreciate that. in reaching some more people perhaps that like this video and other videos as well from Admiral Markets. So, we had it up, down, and it's partly because of the weekly candles. We had basically an uptrend channel, right? But we had a bearish candle, so I was thinking that we would retrace part of that bearish candle, then retest part of that candle, but find resistance because of the bearish candle. That would create downside, but we would not, I didn't expect we would break necessarily the trend channel plus the strong bullish candle here, and we would see a bounce off of that. So simply looking at candles and some trend lines and a fib here and there can do and go a long way. At this moment, we obviously see a strong bullish candle, and we see another bounce off that bottom of the trend channel. We also see on lower time frames a pretty sturdy momentum to the upside. Now, before I think that there is an interesting continuation, I would say I would be looking for a triangle, a corrective pattern here before trading it, because we have momentum to the upside, but I would like to see a bit of a pattern first before trading it. Just like the euro dollar, I want to have a bit more understanding whether they're going to see a consolidation or whether this is basically hitting a resistance and we might find some difficulties with that. We see already price moving down lower as we speak. This candle is not closed, but if it does close like this, then that would be already a strong signal of a pause at the very minimum. So this is basically, I think, a bullish environment on the weekly and daily. It's just a question of finding a good spot. Now might not be the right spot. I think if we do move higher, just looking at the weekly, the next target, because we already stopped at the 61.8 fib, is the 78.6 fib at 115. So ultimately, I would be looking for continuation there. I just don't think that now is the right spot. I think that I'll be looking for an hourly or 4-hour kind of triangle or correction and a break of that correction to trade it up to 115. Dollar yen is looking bearish as well. We basically are making kind of a correction, just like the euro dollar. I would like to see on the euro dollar. That is what the dollar yen is doing. We have a downtrend and we have bearish momentum, and we're getting a correction. So I'm looking for a break of 104 here for a breakout down to basically these targets. I think ultimately it can go all the way down to 100, which is a bigger 50 fib on the monthly chart, around 101. So I think we can get down all the way to here. These two purple lines indicating as well basically the support levels from here, as you can see. So we have a bearish weekly candle, as you can see. So I think a bit of a retracement of that, but I don't expect a break of that high. Last week's high is at around 106.90-ish. Don't expect a break above that. Just a bit of retracement, perhaps halfway of this candle, which is, let's take a look, around 105. Right, so maybe 105 could be the turning spot for a move down to roughly 101. Now 101 does not have to get hit this week, but within the next weeks I would expect that to happen. This week I expect probably price to hit 105 or 105.50 and turn around there, then break this trend line. But of course, that also depends, as always, this week with the big news event. All right, Aussie, we see basically price retesting the 61.8. We said last week, is this a dip up for more down, or is this actually a dip down for more up? Ironically, I was 50-50 on that. Just from a bigger time frame perspective, both could have been possible. I think we do have more evidence of a 61.8 fib bounce now. Target 76 or 77. Right here, the -272 and -61.8 target. But here too, actually, just like the euro dollar, I'm looking for a triangle. I think that this zone right in here seems sweet. I'll put some lines on that box right there. You can see around 74, 73, 75. That looks like a nice zone where price could dip back and bounce. So if the price gets into that zone, I'll be interested for looking for a long, basically as a continuation with this momentum correction and continuation. So that would be a small dip within that upside to 76 and 77. All right, hope to see you in the upcoming webinars and wish you all safe and good trading, and talk to you soon. Cheers.